Greetings, friends. Today I'm going to tell you what I personally think is going on with bank runs, Silicon Valley Bank, cryptocurrency, where the market is going, stocks, real estate, all those things. So I want you to get your pen and pad out and take some notes. If you've watched some of my posts the last couple of days, I've been up to like 3 a.m. with our teams, and we made a ton of money. And I'm going to share with you some thoughts that I have on where the markets may be going so that you can maybe navigate a little bit of how not to lose all your money in banks, how you can maybe preserve some capital in real estate, in stocks, and all those kind of things. Now, this is not financial advice. This is just my personal opinion and analysis of what I see going on. So I'm going to dive into all these things right now. I've been getting hundreds of messages on what's going on. And a lot of the messages that I've been getting are from our ugly unicorn hedge fund investors that are just like, man, how are you and Bridger navigating so well? And I'm going to explain to you what we're doing. Now, if you are interested in the ugly unicorn hedge fund, it's only open to accredited investors with a minimum of 100 grand deployment. We can run you through our PPM, presentation, everything like that, and you can have your attorneys, CPAs, whoever you need to have a look at it, due diligence on it so you feel comfortable. And if you have any questions, I would be happy to answer all those for you. Okay, so let's dive right into it here. First, the Silicon Valley Bank fiasco. There's a big problem that happened with Silicon Valley Bank in that they bought treasuries and things like that at like 1.5%. They deployed too much. They took a massive $1 billion plus loss on that, causing people to want to like take the money out of the banks. Right now, if you've watched, so many banks today are just getting hammered and people are running for their money. A lot of wires, and I've talked to a lot of executive vice presidents and leaders of banks, and they've said a lot of wires are actually being delayed and held before those are approved. So even if a wire is fired off, there's a good likelihood that your wire may not go through if you're trying to withdraw money from a bank. So there's a lot going on. So many calls with so many industry leaders out there the last couple of days. So I want to give you the insight. I know a lot of fund managers don't want to share this kind of knowledge with you, but for me, it's just about providing you with the information that I see to help it so you can do your own diligence and try to mitigate risk. Our thesis to our fund is risk mitigation. So let's get straight into this. First, a lot of people are asking, are the banks a bunch of banks going to go belly up? Am I going to lose my money? Is the FDIC going to guarantee it? Is the government going to guarantee it? As you saw in my post about, like more than a day ago, that I believe that the feds would come in and back Signature Bank and Silicon Valley Bank, which they did, right? You've seen some major drops in bank stocks. Trading on the stock market being actually halted on many of these banking positions. But the most important thing to do first is take a deep breath, be calm. You can make decisions, but don't make rash decisions. Make sure you do your diligence. Talk to financial professionals like your CPA, your banker, your attorneys, all those kind of people. Just make sure that you're not getting reactionary. But it's not a bad thing to be responsive. There's a big difference between reaction and responsive. So let me just give you a journey of what Bridger and I did with our funds. We moved millions of dollars worth of USDC when the DPEG started, meaning a DPEG that USDC was supposed to be pegged at $1. When it started going below that valuation, we moved a lot of that into other crypto assets. The bonus about that, though, is when we moved them into these assets, you saw in my post, some of them went up 10%, 15, 17% in the last 24 hours. To give you a crazy statistic, the total market cap of all of crypto went from about $1 trillion to like a little over 1.1 trillion. That's a 10% increase in a 24-hour period. That's a big deal. And so I just want to explain why that's happening and why I believe it'll continue to happen depending on how things roll out here, okay? But first, the feds backed some of those banks' deposits out of Silicon Valley Bank, Signature Bank, and a few others. They listed that in a post, and you can read that on the Fed website. They did this because they didn't want to instill fear that people would lose money. Plus, I believe that tech innovation is like a core foundation of what America is. So I don't think they could afford to have let all those tech companies miss payroll and those kind of things. So the Feds typically like to, react in a way that, it's not going to cause a major domino cascade effect. But we're still seeing some sort of that effect. Now, USDC had a little over $3 billion of their like $30 billion in one-to-one asset-backed treasury in Silicon Valley Bank. You could probably Google and read. It's up to you to verify all this data because some of it needs to be clarified. But that was the biggest fear. So like if USDC was backed like essentially with $1 for each one USDC, you saw it depeg down to about 88, 89 cents there for a minute. So $1 of that token was only worth 88 cents. But as soon as the relief came that the Feds were going to back them in the announcement, then it rallied back up. It actually went to be worth like $1.01. It went way over for a minute there. That's kind of interesting. A lot of people now are rushing to move any funds they have in banks. And some people feel safe with a $250,000 FDIC insured amount, but there's less than $200 billion that's available for FDIC to back things. But there is one thing that we saw in the last big pandemic that happened is the Feds are not afraid to try to keep stability by printing money. Trillions have been printed during that time. And I don't think they would be afraid to print 1, 2, 3, 4, 5 trillion more dollars if they had to stabilize banks. I believe they just don't want to see all the major banks crash, right? Now, if they print all this money, that will give people a little bit more security, I believe, on where their cash is to be able to withdraw it, make payrolls, and have liquidity there. But if they print more money, it's going to obviously cause inflation to rise. They've been raising interest rates to cause inflation to try to go down, right? And try to cool the economy, to raise unemployment so we could bring inflation down. This may be the black swan that kind of hits us again, in that if they're forced to print money, that's actually going to exacerbate the problem with printing more money. And you may see $20 a dozen eggs after this. But probably a better alternative than seeing a total financial collapse, just like you saw during the pandemic. This is going to make real estate a lot more unattractive because if rates continue to get raised, the cap rates in real estate tend to get a little foobar, and that makes real estate values tend to go down. Now, I know we have an inventory supply problem because a lot of people have their real estate locked into very low interest rates, 3, 2.5%, 4% rates, 30-year fixed notes. So a lot of those people are not wanting to sell the real estate. I know personally, I don't want to sell out of my real estate that I have at like 3-something %, 30-year fixed note. That's like way less than inflation, right? So that's why the inventory shortage. So, with real estate, you're going to see just like in 2008-9, it depends where the U-Hauls are going. So like in Utah, we have high demand, and in Florida, you have high demand. So a lot of the real estate there will probably stay fairly stable. It just depends on the market that you're talking about real estate in. But what all this is going to do, it's going to make sitting on large amounts of cash have a double disincentive. One, inflation is going to shrink that cash. So if you had $100,000 or $1 million sitting in an account, it's going to shrink with inflation. It's going to have less buying power, right? That's a big thing that's going to continue to happen as long as inflation is high. But if people lose the security that their money is safe, that's going to have another implication. So again, crypto has gone from a $1 trillion market cap and in 24 hours to over 1.1 trillion, which is a 10% market cap increase. Market cap is the total value of all that crypto put together. So there's going to be a big flood into crypto, I believe. A lot of investors have been calling me saying, hey, they want to put more money into our fund. Now, we can't help everybody because it's just for accredited investors, and we have a limited amount of investors that we can have. So for some people, that'll be a safe, haven. But for your average person out there, can be kind of uncertain times, especially if you're afraid of a recession and you've stockpiled a lot of cash. And being that the banks aren't paying that good of a returns on that cash right now, it's just melting quicker than it's actually growing from the yield that they pay you. So I see crypto having a good chance of increasing its market cap even more this next little bit. Now, USDC, I want to talk about that stable coin a little bit. USDC, the concern was that the money they had in Silicon Valley Bank was possibly lost. So that's why it depegged. At first, you saw a certain percentage and then it went down to like 88 cents or something, where it should be at $1. But as soon as the Feds announced that they were going to back that, my theory is, and this isn't validated, but I believe that USDC Circle probably took a lot of that money and withdrew it out of SVB, and now they're going to deploy that into government treasuries, right, and government-backed assets. That there's some more certainty. That'll keep their one-to-one peg. So the chances of USDC now that they've got all their liquidity out and are putting into more government-based assets, backed assets, has a lot more chance of being stable through time. Hence the big flood of money going into that. So that's kind of interesting. Where's it going to go from here, though, and what are some things that I'm doing? So first of all, I think if you're sitting on a lot of cash in one institution, it's not a bad idea to distribute that between different financial institutions. FDIC is $250,000, but as you've just seen by what the Feds have done, they have actually, backed larger amounts of that with SVB. So I would think there's maybe a good likelihood that the Feds, back all these banks that are giving people uncertainty right now. Personally, I did some moving around some funds that were queued up for today, and none of those funds have actually transferred, and it's past 2:00, which is like the closeout time typically. And so I think there's a lot of wires that are being, or in the ACH is being held up right now because there's a lot of weird stuff going on in the background. Some of these bank stocks before they were halted were dropping 75% plus. I mean, it is pure lunacy, but it is going to be what it is, right? So I would say the smart thing is a diversified portfolio. I feel probably the safest in my real estate assets that I'm collecting rents on, and I have locked in debt service at a low interest rate, and they cash flow. So real estate, as you guys know, you guys probably think I'm all crypto, but real estate's more than 75% of my net wealth, personal holdings, and I really like that. I like moving into that and taking profit sometimes, so that's good. Stocks in good companies, obviously, are something that you may want to do some research on and consider that are cash flowing well. But macroeconomics says that if there's a major correction, everything gets corrected. So there's not a total safe haven there as well. But again, what we're seeing from a lot of investors, though, is getting into, again, crypto because they feel like crypto, being that it's decentralized. So I'm not talking about putting money into centralized exchanges like Coinbase and things like that. I think people are feeling more comfortable putting money into decentralized crypto. And when we're working with crypto in our fund, like the majority of it, unless it's an on-ramp, is always decentralized crypto earning yield. And what does that mean? If we buy tokens, we provide liquidity for decentralized exchanges and we earn yield. Some of it pays 4%, some of it pays 12%, some pays 180% to our investors. So there's quite a big array there. As you saw, those of you that looked at some of the performance from our fund, though, we have far outpaced the Dow, the NASDAQ as of mid-month last audit, the internal reconciliation that we did. Not audit, but internal reconciliation, non-audited. We were beating all those indexes significantly as fund managers because my thesis is risk mitigation. Try to keep risk as low as possible during tough times. Because, it's always like falling off a cliff on the way down. So if you lose 50% of your investment, you got to gain 100% to make up for it. Lowering that amount of loss is hypercritical to run a good fund. And I think I've looked at a couple dozen other funds, and we're performing a lot better than all of them. In fact, making our investors money as of this morning quite a bit. So it's been a good journey. So what would I recommend doing? I wouldn't panic. If you think the FDIC will back stuff within their 250 grand limit, you probably want to make sure you're not sitting in too much cash in any one bank. I think that's a big one. You can also buy. You can talk to your insurance broker. Different types of insurance to insure cash as well. And different banks have different sweep structures where they sweep money out and distribute it to a bunch of different other banks to blanket some more protection. So you can talk to your banker about those kind of things. But there's a lot of different things you can do to be safer, even though nothing is completely safe. So that's one thing. I wouldn't freak out per se. Myself, I'm not running to the bank and trying to get all this cash out. There's not that much cash in banks. Most banks are highly leveraged in that if they have X number of deposits, they loan out 90% plus of that for illiquid things like mortgage-backed securities and all different kinds of things, right? But even things such as treasuries paying a low yield of 1.5 like SVB did aren't necessarily the super safe thing either. So at the end of the day, here's what's going to probably happen. The government, I believe, will have no problem printing trillions of dollars to back a lot of these banks. Not all, but a lot of these banks. Select banks that they have a financial interest in to not default and cause a massive cascade. What I'm going to be doing actually with stocks is dollar cost averaging into banks that I feel have good balance sheets and assets, a small amount into those. I'm going to continue to deploy into crypto probably more heavily than I normally do as well. And I'm going to try not to buy stupid things that are a waste of money, take stupid extravagant vacations or anything that's wasteful, because any sort of money that you have right now, whatever asset that you're in, is probably a lot more valuable when the market's on sale, as a whole. Now with the stock market, we saw a lot of chop today, a huge rise, and then, back down and so forth. So there's going to be a lot of chop. If you're going to be deployed in any sort of investment, you're going to have a strong stomach right now. You really are going to have a strong stomach. A lot of people have asked me, should I buy gold and silver? Because that rallied pretty hard. And as I always told you guys, I always buy a little bit of gold and silver, usually every month. Not a crazy amount, but enough to have a little bit. My play over the last 32 years of doing business has been diversification. And some people say, look, diversification is bad. You should be in all one asset because you're spread too thin and you won't be good at anything. I believe that's untrue. I think multiple income streams from real estate, from stocks, from crypto, from businesses that I own, all that really helps me sleep a lot better to know that if one thing would have some major volatility, I do have some other cash flow coming in from other sources. But I think the most important thing for any of you guys today is you could use this app called Mint, or you can just write it on a paper. Write down all your monthly liabilities, your money going out, notate how much money is coming in every single month, and balance that. If you're in a negative deficit where every month you're actually building up more debt, you got to really adjust your lifestyle. Cancel Netflix, all the subscription junk. Stop ordering DoorDash and Uber Eats, and stop all that wasteful stuff. If you're on vacation and spending tens of thousands of dollars, going off to some extravagant thing, probably the stupidest thing, because that vacation that you drop $5,000, $10,000, $20,000 on right now is probably going to cost you millions of dollars over the decade if you took that money and invested it correctly during a sale. So I'm all about dollar cost averaging. In the investments that I choose, I like to take a fixed amount per month and put that into those investment buckets, separate buckets, and I treat it like a bill, and I consistently do that every month. Now, if I need more cash flow, I may slow the roll if I have a great month and I make an extra $1,000,000 or something crazy, I'll disperse that a little bit and a larger percentage into those funds. Now, whoever you're watching on Instagram or anywhere and reading articles and trying to figure out how to navigate this, you just want to look at historical performance of that person you're talking to. I mean, have they been doing this for a year, 2 years, 5 years, 10 years, 20 years, 30 years? And what's their track record? I mean, that's what it comes down to, is track record. I've run tech businesses for over 3 decades now, and we've done pretty well. You could check out my bio and all that and verify all that, LinkedIn and all that. But not because I'm a genius. It's just I think it's about consistency and speaking to experts in each field. So first thing I did with this banking thing is I talked to all my friends who own crypto exchanges. I talked to all my friends who run banks. I talked to my friends that are in the government. I talked to other people that hold large amounts of stocks and lots of crypto and lots of real estate. And I tried to hear their opinion. People who are doing better than me actually in that focused sector. And I aggregate that data and calmly try to put together a plan which is with one thesis: risk mitigation. Because I'm telling you, it's like falling off a cliff on the way down, and it's like taking the stairs on the way up. I want you to think about these things today, and if you need to watch this video again, the one thing you can do is this. I guarantee you the majority of your friends, family, and neighbors are scared crapless right now. What do I do? So I encourage you to do this. This video is free, but just share this video on your social feed so that people don't make rash decisions. They don't put all their money in one thing, whether it be crypto or real estate or stocks or cash or anything. That's probably the worst thing you could do, is to go all in into anything. I say that's like going to Vegas and drinking up a whole bottle of vodka and being drunk while playing poker. Probably the stupidest thing you could actually do, okay? Don't do things to give yourself temporary mental ease and satisfaction, physically, financially, or spiritually. Just be calm, do the mathematics, do your own research, talk to the experts, and then execute how you feel like you need to execute. That's my opinion, guys, and I hope that helps you. But the one big thing is fear really doesn't cure any problems. It usually causes reactionary responses, which cause you to have regrets. So one way you can contain your fear, if you're all stressed about this, take a walk for 30 minutes. Go over in your head what you're grateful for. Your wife, your husband, your dog, your children, your grandma, your grandpa, your mom, your dad, your coworkers, your friends, your family, whoever that may be, and share some gratitude out. That'll give you a little bit of grounding to be able to think through what you need to do to navigate this. Now, I've been around on this planet for a while. These same emotions were happening in 2008, 2009. This was happening during the dot-com bubble as well. This was happening during Y2K when everyone thought the whole world was going to explode. The same thing just happened during the pandemic. Again, the worst thing you could have done is just freak out and lose emotional state control. So state control really is the most important thing to do. This video is out of cycle because I have a certain social media cadence, but I think because it's the sheer volume of messages from friends and family and investors and employees and relatives, and I think everyone needs to hear a little bit of this comfort. So what can you do? Share this video so we can offer a little bit of comfort to people. And at the end of the day, if you're breathing, if you're alive, if you have your health, if you have your mental wits, and you have a plan and you have good mentors, your chances are much, much higher to actually come out of all this way ahead. In fact, the greatest opportunities happen when there's blood in the streets. Greatest opportunities. I've made the most money during blood in the streets. So I'll try to make as many videos as I can, guys, to help you guys. And as you guys know, I'm not going to push religion or anything on you, but it does always give me personally a certain amount of calm and confidence knowing there's a creator who made us and we're here for a purpose and a reason. And I believe my purpose is to try to leave this planet a better place than when I got here, because our time here is very limited. And at the end of the day, all this money and assets and all that aren't really the meat and potatoes of what I believe existence is as a human. I believe immortality can be reached by helping other people that teach other people. So as long as humankind is on this planet, if you've taught and shown a good example and you pay that forward, you can be immortal, at least in this world, because of the knowledge and the goodwill that you've shared with others. That's it, guys. Take a deep breath. You're going to be okay as long as you get the data and respond and don't react. Okay, guys? I love you.